I have been day trading for more than 3 years now, and let me tell you one thing, that being on a red streak or a trading slump is the only consistent part of your day trading journey, even more than your P&L. But the good thing is that with time and experience, you get better as a day trader in dealing with your red streaks and trading slumps. In this video, I will be breaking down my current trading slump because February 2022 hasn't been going too well for me. I will also be telling you a few steps that I am taking and you guys can also take to avoid a disaster when in a trading slump and how to come back from a trading slump. At the end of this video, I will break down a few trades I took the last trading day just to show you guys how I am dealing with my trading slump. So Feb 2022 has been a slow month for me. Even if you take a look at the chart of SPX or SPY, you guys will see that on most days we have been trading in between a range. A lot of our members from our Discord community have been killing it, but a lot of other members, including me, are finding it a bit more difficult. And that's the life of a day trader because it's not always going to be bells and whistles. You need to accept the fact that you will see upside, you will also see the downside, but your job as a day trader is to control the downside so that in the long term, your equity curve can grow towards the upside. If you guys have been following me for a while, you guys know that I start out the month really small. Once I'm green for the month, I like to increase my position sizing a bit, risking a bit of my profit so that I can make more money. But if I'm not able to read the price action correctly, if I'm not green for the month, I keep my position sizing really small, and that's what I have been doing in February 2022 because this month I go green, then I go red, then I go green, then I go red, and the cycle repeats itself. To be honest, this month I should have taken a back seat and not even trade a few days because if you look at the past 8 or 9 trading days, as I broke down already, we were trending only 1 or 2 days. So I should have taken a back seat, which I did not. I kept trading, so I'm going green, red. But I think I have been doing a pretty good job in managing my risk. Let's take a look at few P&Ls for this month so you guys will get a better idea of what's happening with me. On 1st of February, first day of the month, I was up $784, which is not bad, a good start to the month. And then on 4th of February, I was up $2,500, again, a good day. Then in between, I had a few small green and red days, but on 9th of February I lost $2,000. So you guys can see that I can't get the ball rolling. What I mean is that I go up $200-$300 and I lose $200-$300. I make $2,000, I lose $2,000. Then I make $500-$600, I lose $500-$600. So this month has been going up and down for me. So as you guys saw, I can't get the ball rolling this month, which is okay. It's part of a day trading journey. You will go through these cycles, but with experience you just get better at dealing with these cycles so that the upside is going to be insane. Now coming to the steps you guys can take to come back from a trading slump, the first step is to lower your position sizing. This is very important. In other words, focus on the process and not the P&L. For me, I have lowered my position sizing big time. I'm only trading 2 to 5 contracts these days because even if I'm green $200 or maybe $500, the small wins add up to your equity and to your confidence as well, because when you are in a trading slump, your confidence gets beaten down. Your job as a trader is to preserve your confidence, come back slowly, focus on the process, focus on taking good trades because small wins will add up eventually. The worst thing you can do as a trader when in a trading slump is to increase your position sizing and go for those home runs, because every trade is a risk to reward game. When you're increasing your position sizing, you're also risking a lot of money, and if you lose that amount of money, your trading slump is only gonna get extended. And that is the exact same reason why I have lowered my position sizing personally, because I am focusing on the process and not the outcome. I'm focusing on taking good trades, following proper risk management, account management, because the outcome is secondary. The P&L will follow if you follow good trading process. Even if I make $10, $50, $100, $500, $5,000, I don't care. I'm just focusing on taking good trades. Now the second step to come back from a trading slump is to focus on reducing your stress, because stress clouds your judgment. This is not a science channel, it's a day trading channel, but I would highly recommend you guys to go and watch the Huberman Lab podcast, because you guys can use those principles in those podcasts to your life in general and to day trading as well to improve your performance in day trading. In this video, I will be telling you guys my experience being a trader and with stress as well, because when I was a beginner, my whole life was trading. I was focusing 10 to 12 hours every single day on day trading, learning about day trading, maintaining my journal and everything, but that is not sustainable in the long run. In the long run, you also have to focus on your life outside of trading, because that's gonna directly help you with trading as well. In the long run, trading is just part of your life and you have to focus on your life outside of trading. Maybe go for a workout, spend some time with your family, go on a vacation, or do whatever needs to be done to lower that stress level. For me, when I am feeling stressed, I just have a cup of long black because that relieves my stress. Apart from coffee, there's one more technique you guys can do when you're actually trading, or maybe you face a huge loss in the market and you need to calm yourself down and reduce your stress. You can do the physiological sigh or psychological sigh. I don't remember the exact name, but this was talked about in the same podcast I was talking about earlier in the video. The link will be in the description box below. In this technique, you have to breathe in twice quickly and then do a longer extended exhale. Once you do like this, it's gonna calm you down instantaneously. To learn more about how this works or why it works, you can go and listen to that podcast. The link will be in the description box below. I strongly believe in deploying the ideas of science and technology to your trading. Science to learn more about your body so that you can perform at your best, and technology because I use a lot of different platforms. I need to know what is happening with the overall market. The third and the last step to come back from a trading slump is to stick to your rules. Rules are there for a reason. Especially you have to follow your rules when you're in a trading slump. Rules are not meant to be broken. Yes, you can bend your rules when you have the cushion for the week, cushion for the month, when you are green for the month, but when you are on a trading slump, stick to your rules no matter what. Basically, you should have rules, for example, sticking to your stop loss, number of trades you can take in a day. All these rules are gonna help you survive a choppy market and a trading slump. Let's now take a look at the trade I took on Tesla and how, as a trader, I am sticking to my rules personally so that I can come back from this trading slump. But before we do that, make sure that you guys give this video a thumbs up, subscribe to my channel and hit the bell notification to learn more about day trading and my journey as a day trader. This is the one-day chart of Tesla, and you guys can see if we break down this chart, the last push we had on Tesla was on 31st of Jan. We had strong green candle. I have removed all the indicators from this chart so that we can focus on the raw price action, and since then, since 1st of February, we have been consolidating in between this range. This range is from $950 to a low of around $880 right here. On Thursday, we tried to break $950 level towards the upside, but we closed like a doji. This is a bearish doji. What I mean is that buyers tried to push it towards the upside for the break of $950 level, but sellers eventually won, and this closed like a small red candle with small body and a big bearish wick towards the upside. That means sellers won eventually at the end of the day. On Friday last week, I was liking Tesla for the break of the previous day low that was around $895 and the break of $900 level towards the downside. The next level we have is the yesterday's low that was around $895. Underneath that, we have a very strong level right here, which is approximately $880 level, because 880 is approximately the low of the day right here, where Tesla bounced off in December last year. 880 was the low of the day right here, 880 was the low of the day right here. So if we break 880, we might have a push towards the downside towards 850 as well. So these are the three levels I was focusing on for a break towards the downside. We just broke down the daily chart of Tesla. Let's now take a look at the 1 minute chart and what happened on a bit shorter time frame. At 9:30 a.m. at the market open, we had a push towards the upside. That push failed to sustain, and then we saw sellers took control with the strong red candle towards the downside. On the next minute at 9:35 a.m, Tesla made a new low of the day right here. After Tesla made a new low of the day with the overall market looking weak, QQQ and SPY were also selling off around this time. I was just waiting for a pullback entry. After making a new low of the day right here, Tesla pulled back to $908 level. It held that level a few times. On the level 2, I was also looking at the tape. I was looking at a lot of weakness around $908 level. I entered my push position right here with the stop loss above 910. My entry was 908, and then I caught this move towards the downside. Let's now jump on to my entries and exits and take a look at my trades real time. Here's the recording of my trade on Tesla. We saw a push towards the upside, then a push towards the downside. Tesla made a new low of the day. At the retest of $908 level, I saw that bids are failing to hold above 908. I placed my order to get filled. I got filled 10 contracts. I'm trading 900 puts, same day expiry contracts, and my fill price was 8.33. My stop loss on this trade is the break of 908 or 909 towards the upside. After my entry on Tesla on this candle, we held the $908 level very nicely, and then after the next 1 or 2 minutes, we made a new low of the day right here. The previous low of the day was around $904 level. When Tesla made a new low of the day, I took 5 of my contracts out at a fill price of 9.40. I'm still holding 5 of my contracts to see the break of $900 level towards the downside. At the break of 901, I was not looking at a lot of selling pressure because Tesla was around a very critical level. $900 level is a very good psychological level, but I was expecting a clean flush towards the downside and the break of $900 level. That is not what was happening with this stock, and also the tech sector QQQ was finding a support around the low of the day. That's why, just to be on the safer side, I covered 2 more contracts at a fill price of 10 and 10.31. I was left with 3 more contracts because I took 10 contracts, and if you guys have been following me for a while, you guys know that my stop loss on those 3 contracts will be break even. So if the premiums come back to my entry point, I will exit my whole position. At the break of 905 towards the upside, the premiums approximately came back to my entry point. My entry was at 8.33 and the premiums came back to 8.54. That's why I covered my whole position with an overall profit of around $1,000, which is still a really good trade. Let's now take a look at my P&L for the day. After my first trade on Tesla, I took 2 more trades. On my SPX trade, I wanted to take 2 contracts, but I took 5 by mistake. And on my next Tesla trade, I went for 890 puts, next week expiry contracts, and I only took 2 contracts. So you guys can see I'm lowering my position sizing when I'm green for the day. I'm not trying to score that big winner or home runs because my primary focus at this point is just to get a few green days so that I can build up my confidence slowly and steadily. I'm not increasing my size when I'm green, and definitely not increasing my size when I'm red for the day. That's it, guys. Hopefully the steps mentioned in this video are gonna help you to come back from a trading slump or maybe a streak of red days. If you like this video, give this video a thumbs up, subscribe to my channel if you are new, and hit the bell notification because it helps out the channel a lot to reach new traders out there. If you don't follow me on Instagram, make sure that you follow me there because I post a lot of behind the scenes of a day trader, my green days, my red days on Instagram as well. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.